If you haven't owned a home in the last 3 years, you may qualify as a first-time home buyer. That means if you've owned a home but lost it more than 3 years ago, you may be able to get a fresh start under these programs. Hi, I'm Leslie Martin with Dwellings by Rudy & Hall. In this video, I will be talking about Michigan first-time homebuyer programs. Let's start with the conventional mortgage. This type of mortgage is best for its low down payment options and its limited mortgage insurance premiums. First-time homebuyers can get a conventional home loan with as little as 3% down if the mortgage meets requirements set by Fannie Mae and Freddie Mac. And if you put down at least 20%, you won't have to pay mortgage insurance. Most lenders require a minimum credit score of 620 to qualify for a conventional mortgage, but a score around 740 earns you the best interest rates. Next up is the FHA loan. This type of mortgage is best for home buyers with low credit scores or looking for low down payments. This is the go-to program for many Americans, especially first-time home buyers and those who have had credit history that's, let's say, shaky. The Federal Housing Administration guarantees a portion of home loans, which frees lenders to broaden their acceptance standards. With FHA backing, borrowers can qualify for loans with as little as 3.5% down. If you're a military member, veteran, or surviving spouse, the VA loan may be a great fit for you. These loans are guaranteed by the U.S. Department of Veterans Affairs. If you qualify, you'll see such benefits as no minimum credit score and no down payment or mortgage insurance, but you'll likely have to pay a VA funding fee. If you're thinking about purchasing a home out in the country, then you should take a look at the USDA loans. This home loan is a zero down payment mortgage for eligible rural and suburban home buyers. USDA loans are issued by the U.S. Department of Agriculture through the USDA Rural Development Guaranteed Housing Loan Program. There are income limitations, which vary by region. Applicants with a credit score of 640 or higher receive streamlined processing. Those with scores below that must meet the more stringent underwriting standards. The Michigan Home Loan is a state program for first-time home buyers and repeat buyers in targeted areas with low to moderate incomes. The loan has a favorable interest rate thanks to a bond program that subsidizes it. The minimum credit score is 640. All loans under the program are 30-year fixed-rate mortgages. Every adult who intends to live in the home must apply and meet loan qualifications except for full-time students whose parents live in the home. The loan can be used to buy a manufactured home if the structure meets MSHDA guidelines. It also can be used to buy a single-family house or condominium. Finally, the Michigan Home Loan Flex program is true to its name. It's a little more flexible than the Michigan Home Loan program in a couple ways. It's for first-time and repeat home buyers statewide, and it doesn't require all adults who intend to live in a home to apply for and qualify for a mortgage. The Flex program is a bit more restrictive in a few ways. The minimum credit score is 660, but it doesn't require every adult in the home to apply. Not all Flex loan types can be used to buy a manufactured home. With a conventional Flex loan, the minimum down payment on a condo is 5%. Flex loans have the same income requirements as those in the Michigan Home Loan program, so it's for home buyers with low to moderate incomes. A home buyer education course is required if you borrow more than 95% of the home's value, whether or not you accept down payment assistance. Because this loan program is not subsidized by the state bond program, interest rates are higher than those under the Michigan Home Loan program. I hope you found this helpful if you are a new home buyer or someone who hasn't owned a home in more than 3 years. If you would like more information about the first-time home buying process, be sure to like, comment, share, tag, and subscribe.